How does the China slowdown affect your investing ambitions, the choices you're making, what you're seeing? I mean, has it been as easy as you thought it would be to get into that market? And do you think it's going to take a longer time than you originally thought?
Yeah, I wouldn't say it was easy, but we set out a thesis of we raised permanent equity on the London Stock Exchange with the idea that we would be more welcomed by heads of state and regulators if we have permanent equity versus private equity, which has to be returned to LPs. I think that benefited us hugely. We were very welcomed. In the first year, we did 4 deals in 7 countries. One of those deals was in 5 countries: Botswana, Zimbabwe, Zambia, Mozambique, and Tanzania. And 40% of the shares were held in a private equity, publicly listed German entity. And it was closed and we're open for business in 5 months. That's unheard of. So to get a banking deal that complex, closed with all of the regulators and all of the branches opened in 5 months, told us one thing: that Africa is open for business. They want investment, but not just investment. They want operators. They want people that can come in and develop specialized banking for women businesses, specialized banking for the agricultural sector, specialized banking for the natural resources sector. So it's fun. It's a lot of hard work. But I think what's really important is that it's open for business. And not many emerging economies with this potential allow foreign investment into banks, but also majority ownership of banks.
Yeah, let's stay on the subject of China and its relationship with Africa. We have a Twitter question from Twitter user Raffaele Fedele. I hope I pronounced your name right. And they ask, what's the role of China in the development of Africa? Bob, you must have seen China a fair amount with their investments there. You know,
they're I don't want to say they're all over, but they're all over. But if you think about the role of Chinese banks as an example, it's not the same as our investment in bricks and mortar and franchises. It's not just bricks and mortar. What they're really doing is the Chinese banks are following their customers and clients into Africa. And I think that's appropriate. I think if I were advising a Chinese bank, it wouldn't be just expand. It would be follow your customers. And so one of the impacts that we have seen is that the Chinese companies, particularly the state-owned enterprises, come down to Africa fully financed. And the competition from the African businesses is difficult because they really struggle to get financing. So the connection between Chinese banks and the state-owned enterprises has made it a real positive experience for the Chinese companies expanding into Africa. And frankly, they've had a competitive advantage over the African companies.
When you talked about the deal you put together in the permanent capital, 5 different countries, those are 5 different governments you have to deal with. How complicated is that? Because again, rule of law presiding, are they really partners for you? You know, there's been so many issues we've seen investment in emerging markets in the past that simply hasn't worked because the rules of the game can change depending on where you are.
Yeah, and it's an important question because our vision is to build the leading financial institution in sub-Saharan Africa, not just one country. But within that, we've targeted 14 or 15 countries that are critical, and probably 90% of what would be the banking market. There are certainly certain countries, because of the government or policies, that we would not consider. And there are other countries that are challenging, but the potential and the rewards, Nigeria is a great example, can be huge.